Good morning. All of you can hear me. Hi, good morning. Good morning, everyone. Akash, Amit, Ankit, hi. Aditya Prakash, Abhishek Gupta, hi. Arun, Arvind Chaudhary, Atanusur, Avinash Mane, hi. Bhargav Joshi, Bharat Kumbhar, Darshana, Dipalok, hi. Welcome. Girish Hinduja, Hausla Moria, Jinal, Matthew George, Mahesh Kabra, Narayanan, Pallipuram, Piyush Gandhi. Hi, welcome. Welcome everyone. Pritam Patibandla, Samir. Hi. All right. Okay. So, yes. Hi. Yes. Good. Good to see all of you. Good to see all of you. All right. So, today we are going to jump into uh, a situation which actually could be little, pushing you into the back foot. Okay. क्या है ये? Tell me, how many times has a client asked you why this fund? आपने recommend किया है certain funds. Client is asking you why this fund, and you realized your answer was no longer that it needed to be. हुआ है कभी? The client has asked you why this fund, and you realize कि boss आपका answer is not very convincing. अब बोल तो रहे हो why this fund, ये आपके गोल के साथ मैच्ड है, इसका रिटर्न्स अच्छा है, all of that, but it definitely is not what it should be. Second question, how many times, all right, how many of you know that you definitely have a fund selection process which is solid, but the clients still compare you with some YouTube influencer, YouTube video, WhatsApp forward. आपको पता है कि यू हैव डन ए ग्रेट जॉब, अपने सही फंड्स उनको दिया है, फिर भी the client is still comparing you with someone else. Thirdly, if I asked your client to explain why you selected their fund, would they sound confident or confused? Why they selected their fund? So let me say something which is very uncomfortable. How many of you have got into this business thinking that if you give good service, the client will stay with you? This business is not like insurance कि रात को 8 बजे क्लाइंट के पास जाएंगे तो क्लाइंट आपको बड़ा चेक देगा, ऐसा नहीं है. It's not about service. It is definitely about trust, but it is more about knowledge and wisdom. It is about emotions, feelings, communication, messaging, knowledge, wisdom. It is about service, but service is not number one reason. Clients don't doubt your fund selection just because your process is weak. How many of you think that your fund selection process is strong? And how many of you think that your fund selection process is weak? Write strong or weak in the chat box. How many of you think that यहाँ पर definitely there is work to be done? How many of you think that your fund selection process is strong? And how many of you think that the fund selection process is definitely weak? We are all in this business because we are here to identify winning funds for your clients. Today, this session is all about identifying funds for clients. Okay. Now, देखो, clients don't doubt your fund selection because the process is weak. They doubt it because they cannot see it. And when clients cannot see your thinking, they assume randomness. Most MFDs talk about experience. They talk about research. They talk about long-term performance. None of that actually builds confidence. Confidence comes when a client can visually understand how you eliminated options. And here is the hard truth, guys. If your explanation takes more than 2 minutes, you've already lost credibility. Strong advisors don't explain more, they explain it in a very clean manner. Today, clients don't want to know how much you know. They want to know, is this decision deliberate or accidental? Is this decision for themselves or for someone else? And if you cannot show that with clear clarity or clearly, clients will keep second guessing you and comparing you and questioning every time the market falls or dips. Today's session is not about finding better funds, it's about demonstrating a decision discipline. Okay. So I'm going to go show you a 2 minute process, visual process about how things can definitely be changed on the head. Okay. So give me a minute. I'm going to share my presentation deck and we'll get started. All right. So welcome everyone who is joining little late today. Mahesh Yada, Jashraj, Vipul Patel, Vikas Kesarwani, Valmik, Sumit, Suman. Welcome. Welcome everyone. Okay. Let me share my presentation deck. Okay. दिख रहा है? देखो, we are going to talk about a 2 minute credibility framework. Okay. So that you are able to convert any skepticism into trust. So clients do not want more information. They want less of doubt. They want less of doubt. They don't want to doubt you. They don't want more, information. So the traditional approach of flooding clients with data, charts, returns, tables, and all those big, candle charts and all that often backfires. All of these things invites comparison, and then you get into an analysis, paralysis, post analysis, and all of that. So selection bias should be defending why you picked a winner. There are 10,000, 20,000 funds out there. Okay. And it is herculeanly impossible to analyze all of that. But there has to be a selection criteria. Okay. So obviously, today's session, I won't be able to go much depth, but I'll give you a broad sense about how to proceed on this one. Defending why you picked a winner. Obviously, you are selecting 5 funds out of 10,000 funds. Okay. So there has to be a winner in this. You're definitely selecting a winner in this whole process. So showing what you rejected to find the fitment is the rule number one. And that is the only rule. Showing what you rejected to find the fitment is rule number one. And that is the only rule. And there has to be a visual simplicity that leads to clarity. Okay. Rejection first leads to credibility. कि मैंने इसको क्यों ड्रॉप किया, मैंने इसको क्यों सिलेक्ट किया, वो बाद में आऊंगा, मैंने बाकियों को क्यों रिजेक्ट किया, वो पहले आएंगे. So what is a one sheet rule? There has to be a filter, behavior and fitment. Okay. सिंपल 3 बॉक्स में इसको आइडेंटिफाई करना है, हम बताएंगे क्या क्या करना है, and then we will move ahead. So do not give any data overload, no complex return charts, just the structure. Okay. And within 2 minutes, you should be able to be done and dust. Box number 1 is the filter. क्या लिखेंगे? What we never compromise on. Consistent investment style, proven fund manager tenure, risk behavior in bad markets. Okay. Say this: before returns, we eliminate funds that don't pass this basic filter. If these fail, we don't even discuss the fund. Filter number 1. इसका screenshot लेना चाहो तो ले सकते हो. This, what is the psychology at play? The psychology at play is it demonstrates clear standards. You are showing the client why you reject certain kinds of funds. Those who are not able to see the screen, maybe you have to leave and come back quickly. Sometimes it works. Or maybe the visual screen is on the other page. You have to just slide your screen maybe. Okay. Is it visible to all? Is the screen visible to all? Please, can you please confirm in the chat box? Okay, screen is visible. Those Naran Pallipuram, if it's not visible, kindly, you know, slide it to the next screen or maybe exit and come back quickly. That also sometimes work. Okay. Second box, rolling return consistency, not the best year. Most people look at last year's returns. We look at how the fund behaves across different market phases. Downside protection versus peers, portfolio alignment with cycles. Strip number two, most people look at last year's returns. We look at how the fund behaves across different market phases. Immediately, the client will realize that you are not chasing performance, you are analyzing consistency of returns. All right. Thank you, Mr. Pallipuram. Finally, the fitment, why this works for you. A good fund can still be wrong for the wrong person. Selection is not about the best fund, it's about the best fitment. This is a power statement. A good fund can still be wrong for the wrong person. Selection is not about the best fund, it's about the best fitment. This fund fits your goal, time horizon, and temperament. This is your authority closure. It moves the discussion from generic market data to specific suitability. What is the psychology at play when you are rejecting funds? When clients, at the previous slides, one second. This is the previous slide. When clients see how you eliminate funds, box number two. Okay. When clients see how you eliminate funds, they stop questioning why you selected the one. That is the psychology at play when you are rejecting a certain group of funds. Okay. Rejection first, by starting with no filters, the eventual yes becomes more valuable. You shift the metric of success from beating the market to meeting the goal. That actually builds trust. So filters has to be spoken in the first 30 seconds. Comparisons has to be done by the 75th second. And within 2 minutes, the fitment has to come in. What you reject, how you think, why it works for the client. These are the three rules of the game. What you reject, how you think, why it works for the client. The golden rule is stop talking after 2 minutes. The short duration signals authority, long-winded explanations signal insecurity. And as always, there has to be the power of silence. Rambling, when talking nonsense after you have done the pitch, creates openings for doubt. Silence signals confidence. It forces the client to process the recommendation without distraction. After delivering the fitment line, simply stop talking. Do not ask, what do you think? Let the framework settle. Let the framework settle. So what are the tactical deployment scenarios? When can you use this thing? First-time prospects. You can definitely use this. It establishes immediate professional differentiation. Second, direct plan converters shows the value of advice over any kind of algorithm. Third, HNIs comparing with other advisors demonstrates a superior process. Fourth, clients who are questioning underperformance shifts focus to behavior and cycle alignment. And finally, review meetings during volatile markets reinforces the downside protection filter. Okay. So what are the three box execution summary? The first one is the filter. Before returns, we eliminate this. That's the filter. Second, we look at behavior across phases. And third, selection is not about the best fund, but the best fitment. It has to be spoken within 2 minutes. Resultant is credibility. So if you move in that direction, it has been seen that you move from being a salesperson to a trusted authority. This three box Three boxes is just not a presentation tool, it is a positioning tool. It is positioning yourself. You are mastering exclusion. By mastering exclusion, you stop selling returns and you start managing trust. Fitment of funds is far more powerful than returns in the market. All the best, everybody. Have a great day ahead. See you exactly at 10:10 tomorrow. And keep building everything that you're building in your business.